Hi, I'm Jez Sweetland from the Housing Festival. One of the questions that we're looking at as part of this New Homes in New Ways is where are we going to find the capital investment that we need to desperately build more social rent homes? And one of the propositions of the New Homes in New Ways is that that money sits within the public-private partnerships to unlock institutional investment to build these homes at scale. Now, traditionally, many of our social rent homes, our council homes, would have been built with funding primarily and principally from the state. So whether that was national government through Treasury or whether that was working through local government to partner with their own general funds and housing revenue accounts. Now, we're in a very different economic landscape, and what we now know is that Treasury has very clearly signalled there is not more money out there. So the idea of accelerating delivery of social rent homes is going to be very difficult if we are reliant on Treasury. Secondly, we know from the work that we do with local government that the general fund and the housing revenue account, those arms of local government that traditionally can unlock investment to create capital projects and build homes, actually there is not headroom left in those accounts either. Many local governments are under financial pressure themselves, and so their ability to borrow more money has gone. And so we have to be creative about thinking, well, where could that additional capital investment come from? Well, the good news is that there are institutional investors with billions of pounds looking for projects to invest in. And social rent housing provides a great opportunity to unlock some of that investment within their portfolio investment, particularly looking to the pension industry, where they're looking for long-term, low-yield, low-risk investment opportunities. Social rent housing provides a fantastic opportunity there, principally because we know the demand is high, i.e. it's a relatively safe investment. We know from the demand of the number of people on the housing waiting list that we need to build houses at scale and quickly. But we also can work in that public-private partnership to drive down the cost of borrowing, because this is really lending to government. So the risk of insolvency is very low, and therefore because you're coming with effectively a government-backed guarantee to pay these rents, that the model could work to unlock investment. And how does that mechanism work? Well, we're proposing that land in public ownership is leased into some sort of joint venture arrangement. Into that arrangement is put the capital and the land, and the land is leased out for maybe 40 or 50 years into this institution where we effectively are able to then pay through paying the rents, pay off both the capital investment over a period of time, but crucially the element of profit that those pension companies would need to satisfy their own investment criteria. And after a period of 40 or 50 years, the land and the housing comes back into public ownership. So it's a way to unlock private investment in partnership with the public sector to build houses that will behave as social rent homes, effectively council housing, for the longer term, but crucially allowing us to hold on to those assets in the future, so the land and the housing would eventually come back into the public sector. So we think this is a key part to the solution to unlocking new homes in new ways.